I know you have wanted to invest in treasury bonds since the beginning of the year 2025, but you have been waiting for that time the Central Bank of Kenya will float a treasury bond that is tax-free. I'm here to inform you that August is your month to shine. Welcome to Finance Focus with Andrew, a platform where we engage in conversation that endeavor to enhance our financial literacy. In case you are coming across this channel for the first time, subscribe, turn on the notification bell so that you get notified anytime we post a new financial tip. And in this video, we are going to analyze the newly reopened treasury bonds, which are infrastructure bond. I have already done the analysis of the first bond in an earlier video, and I will post the link on the first comment on this video. So for this video, we'll be analyzing the other bond. There are two infrastructure bond that are floated for the month of August. I have already done one, so in this video we are doing the second one. I have talked about bonds so many times on this channel, but for the sake of that person who is watching me for the first time, I will still try to explain what I mean by some terms that might be new, so that at least you get to grab something. Now let's dive in. The title of the bond is IFB1 stroke 2022 stroke 019, and from the title you can be able to get three things. Thing number one, IFB, an infrastructure bond. It is a tax-free bond. The interest you earn from this bond, you will not be taxed from that amount. You will take the whole amount home. 2022, it means that this bond was issued in the year 2022. 019 tells us that the bond had a maturity of 19 years at the time of issue. Now, that takes us to our first aspect that we need to understand, which is time to maturity. And you can see that I have indicated there that the maturity of the bond is 15.6 years. Why is it 15.6 years? This is a bond that was issued in 2022, and right now we are in 2025. So around 3.5 years have elapsed. So 19, if you subtract 19, you subtract the 3.5 years. That's why you have that figure of 15.6 years. Let's move to the next point. Coupon, very important, that tells you exactly home in case you decide to invest in this bond. And the coupon for this particular bond is 12.965%. 12.965%. Currently, government securities are trading at rates between 8 and 10%. So getting a 12.9% and it's tax-free, I will consider that a fair deal. Withholding tax is zero because it is a tax-free bond. Maturity of the bond will be on the 20th of January 2041, but I don't want to dwell on that too much because we have some exceptions that I'm explaining in the next point. That is the redemption structure. Now, redemption structure is a very important aspect of the bond. It is only special to infrastructure bond. That is the only bonds that have the redemption structure. And why is it important? It is important because it is the structure that tells you that the moment that you get to receive back your principal amount. Now let's analyze the structure for this particular bond. Now the structure has two dates. We have the 9th of February 2032. Now on the 9th of February 2022, this is what will get to happen. For all the investors that had invested amounts less than 1 million, they will get 100% of their principal amount back. So if you invest amount that is less than 1 million, on the 9th of Feb 2032, you will get back your principal amount, the total principal amount. But if you had invested an amount that is greater than 1 million, on the 9th of Feb 2032, you will only get 50% of your principal back. You only get 50% of your principal back. Now, if you had invested an amount that is below 1 million, you'll get 100% of your principal back, which means that your deal with the government, your deal with the Central Bank of Kenya will be over. So at that point, you will stop receiving interest. So it means for you, at the maturity of 15.6 years, do not apply. Your investment will run between 2025 and 2032. So for you, it will be an investment of around 7 years or so. Now, for the ones that invest $1 million and above, they will get back 50% of their principal amount. Then they will continue getting the interest on the remaining 50%. Then on the 28th of January 2041, that is when they will get the 100% of their principal amount. But this is only for people who had invested amounts that are greater than 1 million. I hope we are clear with the redemption structure of the bond. Now, let's go to the period of sale. A simple way to explain the period of sale, anytime an artist is doing a show, they have that period that they use to sell their tickets. So they say that I'll sell the tickets for the month of July, then the show will be in the month of August. The same with the Central Bank of Kenya. So the date between 21st of July and the 13th of August, it is the period of sale. It is that period that investors have been given an opportunity to place their bids. Then the deadline of submitting the bids will then be the 13th of August 2025 at 10 a.m. So if you're interested in investing in this particular bond, you ought to have submitted your bid by the 13th of August 2025 by 10 a.m. We have something else there that is being called the settlement date. Now, what we mean by the settlement date, it is the date by which you ought to have sent your money to the Central Bank of Kenya. So you'll be told whether your bid was successful or not on the 15th. That is after bidding closed on 13th. You'll be told whether your bid was successful on the 14th. The government of the CBK will share with you something we call the payment key that you'll need when sending money to the Central Bank of Kenya. So you'll be given the payment key on the 15th of August 2025. So by 18th of August 2025, you ought to have sent your money to the Central Bank of Kenya. And it is on the 18th of August that you will enter into a deal with the government. It is on the 18th of August that you enter into a deal with the Central Bank of Kenya. Let's talk about the amount, the minimum amount that you need. The minimum amount you need to invest in any bond, this one included, is 50,000, and any additional amount should be a multiple of 50,000. By that I mean it should be 50,000, 100,000, 150,000. You cannot invest 80,000 in treasury bonds. I hope that's quite clear. Now, let's go to another important point when it comes to treasury bonds. Now, when it comes to reopened bonds, we have two kinds of prices. We have what we call the dirty price and the clean price. And I will try to illustrate the relationship between the two. Now, we have something we call the dirty price, which is equals to the clean price plus something we call an accrued interest. Now, an accrued interest, it is the interest that you are paid but that does not belong to you. But for this particular bond, the bond will be paying interest in the month of August and February. So you will purchase this bond immediately after they have paid coupons, which means you will not receive money that does not belong to you. And that's why the accrued interest of this particular bond is 0, because it is paying interest on the month of August, and you will buy it on the month of August. So you will not receive any money that does not belong to you. So the clean price of this bond will be the same as the dirty price, and the price might be a price that is either 100, below 100, or above 100, so that we can say if it sells above 100, it is a premium. If it sells at 100, it will be at par, and if it sells below 100, it will be a discount, and that price will be determined by the bond yield, which will only be determined after the bidding is done. So we cannot exactly tell how much you will require to pay to the Central Bank of Kenya for this particular bond, but just know that it is a price around 100 for every piece. So either just slightly below 100, either 100 or slightly above 100. I hope it makes sense. Now, let's go to the payment of coupon. And this bond will be paying coupons in the month of August and the month of February. If you are hearing about treasury bonds for the first time, treasury bonds pay interest twice a year. So there are 2 months that will be sent your interest by the Central Bank of Kenya. Now, I want us to get to do an example and get to see the kind of returns that we are talking about when we talk about 12.9650. And I will use an example of an investor who decides to invest 100,000, so that we can do very simple maths. So 12.965% times 100,000, that brings us to a value of 12,965. It means that for the entire year, you'll be entitled to an interest of 12,965. But this interest will be divided into 2 installments. So every month of August, you receive, that is, the half of that is 6482.5. And every month of February, you get to receive 6482.5. So that is the actual amount that you stand to take home as far as this particular bond is concerned. And I believe that that is all that you need to know before you dive into investing in this particular bond. In case something was not clear about this particular bond or any other bond, feel free to post your questions in the comment section, and be sure that I will be able to address them even way before the bidding period closes. Remember, all this is done. You can do this at the comfort of your home. Nowadays, you don't have to do anything physical as far as the Central Bank of Kenya is concerned. You only need to use the DAO CSD app. If you are interested, just go to Play Store, download the DAO CSD app, and open your account today. In case you get stuck, in case you get any question, feel free to contact. Otherwise, see you in the next video.